Okay. So is my PPT visible?
Yes, sir.
Yes, sir.
Yes,
Yes.
sir.
Okay. So now I shall be discussing the circular flow of income. And in order to discuss that, or rather I'll discuss this by introducing a two-sector model first, then I shall move to three-sector and four-sector, and so on. So what do I mean by this two-sector, three-sector, and so on? They are nothing but the number of economic agents I'm introducing to present the circular flow of income. So to begin with, I shall first talk about two-sector model, which implies that there are only two economic agents who participate in the economic activities of an economy. They are farms and households. Farms are the producing units. They are the producers. Whereas households are the consuming units or the consumers. If I simply divide the entire economy into two players, two economic agents, producers and consumers, then I would suggest that we all are consumers, whereas some of us are producers. Not all of us are producers. Producers are basically the ones who are ready to take the risk of doing the business, whatever they do. They are the entrepreneurs. So we all are not entrepreneurs. Some of us turned out to be entrepreneurs. But we all are consumers, and households are considered as the consuming units. We all belong to our respective households, our families, and each family is a consuming unit. Each household is considered to be a consuming unit. The demand, the households or the consumers demand goods and services produced by the producers. So, how are they interdependent? What happens when producers produce the goods and then how do the households behave in this kind of a framework? That can be explained with the help of this two-sector model, circular flow. As you can see here, I have introduced households and farms. Households at the top and farms at the bottom. Let me consider a particular time period because you are talking about income. That income is flowing, and we are trying to see how income flows in a circular fashion. Obviously, we are talking about a particular time period here. So let's say it is a particular financial year. Suppose it's 2021 financial year. In 2021 financial year, the farms want to produce something. Farms are the producers. So farms are at the task of producing the goods and services. Here, I'm talking about all kinds of farms: agricultural farms, industrial farms, the IT farms, banking, insurance, telecom, anything. So the farms are there. And let me tell you that as you shall proceed in other topics also, you'll get to know. The farms are the producing units. They are called producers. They can be called as sellers. They can be called as the companies. In typical modern parlance, we are using the term companies. So these terms are used interchangeably. Similarly, households are the buyers of the goods and services. They are also otherwise called as the consumers. So what happens? The farms like to produce goods and services. In order to produce goods and services, they require 4 basic factors of production, without which they cannot produce anything. The first thing that they need to produce anything is to have an entrepreneur. That means the very existence of farm brings in an entrepreneur to the fore. You own a farm, a producing unit. That means you have become an entrepreneur. You have decided to, whether it is a farmer growing wheat or rice, or a big telecom farm selling telecom services. All of them are entrepreneurs. So the first thing you need is to have an entrepreneur. And this entrepreneur, once you need an entrepreneur, and that entrepreneur owns the farm, starts the business, coordinates the activities, organizes the activities, and is there to hire land, labor, and capital. Anything you like to produce, you need some amount of land, a piece of land, some amount of labor, and capital. So land can be, depending upon the kinds of business you are doing. These days, you have virtual space. You don't need actually a piece of physical land. But here land traditionally used in the sense of, maybe you can say, a house or a piece of land where you are setting up a factory or growing an agricultural crop. It can be simply natural resource. You can say land is the free gift of nature. So it can be, in a broader sense, you can say it is the natural resource. It depends on the kinds of business you are carrying out. So you may need land, you may not need land. But by and large, here when I talk about land, I am also talking about the house. You are doing a business, you take a house on rent. So that house here is the land. Then you need labor, skilled, unskilled, or semi-skilled, depending upon the kinds of business you do, kinds of activity you do. If it is agricultural farm, you may require more amount of unskilled workers, unskilled labor. If it is an IT farm, you need more amount of skilled workers. So labor is the most essential factor in any business you carry out. Then comes capital. Capital is nothing but the machinery, the factory, the plant you set up, the tools and equipment. So any business you do, you may need some amount of capital. One time individual factor that you install. Like for an IT factory, for an IT farm, it can be computers. The computers you buy can be the capital good. For an agricultural farmer, tractor is a capital good. For a farmer, tractor is a capital good. For a fisherman, the fishing net is a capital good. For a steel plant, the plant itself is the capital good. The plant you are setting up, installing. The blast furnace is a capital good. So for a taxi owner, the car is a capital good here. The taxi, that itself, which is used it's a vehicle that you possess. That is a capital good. So it depends on the type of business you talk about. So in addition to labor, you need capital in some amount or the other. In some sectors, you see there is greater need for capital good. In some cases, there is greater need of labor. Like suppose agriculture. We have not yet mechanized agriculture completely. We employ more labor in agriculture and less capital. Whereas take the case of some other sector, maybe some manufacturing activity. We have more application of machines and less amount of labor is engaged. Okay, in a country like India, we still adopt labor-intensive method of production, even in manufacturing. But you take the case of suppose Japan or Germany, you'll find that the capital replaces labor. They use more capital, more machines. Machine does all that the humans can do. These days, you are talking about the technology which is taking care of everything. So gradually, we are replacing labor by capital. Whether it is good or bad, I'm not getting into that. At this point in time, we are not discussing that. Whether we should come up with the robots which will serve food in a restaurant, which might lead to loss of employment for labor. Those are different questions. We are not addressing that, but I'm talking about the capital here. Capital here is a machine, a tool and equipment, a factory, or a tractor. As I said, any such thing that is a capital good. It is indivisible in nature. So that capital is actually created. As I told you, it is something that is one-time investment. You cannot buy half of a tractor. You are going to buy the whole tractor. You cannot set up half of a factory. You'll have to set up the full factory, or half of a machine, or 1/3 of a machine. So that is the reason why it requires one-time investment of a big amount. And that may amount to borrowing. The firms borrow capital from various sources and then collect it. Then finally they get, suppose they need 100 crore rupees of investment. A steel factory is to be set up, and the company needs to set up the plant, which requires a huge amount of investment, so it will borrow from the public. So, or it will borrow from a bank. When you borrow from a bank, where has the money come from? To the bank, it has come from the households in the form of savings. And that saving is getting channelized towards productive investment finally. Saving is helping you to create capital. So the capital is something that is required in course of production. So anything you do, any business you carry out, you need land, labor, capital, and entrepreneurship. And all these four factors of production are owned by the household sector. Households are the owners of these four factors of production. It's a different thing that not each household is so lucky, so fortunate to have all the four. There are many households which have nothing to sell. They have neither land. There are many households in India which are landless. They don't have land. They don't have labor to sell in a particular time period. Maybe there is no able-bodied person in the household. There are two elderly people living in that house. They cannot work. They are above the age of 70. They cannot sell their labor anymore. They have become very old. They don't earn income, as they don't have any source of saving, or they don't directly contribute to the creation of capital, nor do they have the ability to become entrepreneurs. So many such households are there, particularly those who are below poverty line in a country like India. They belong to those, they don't have any resources to sell, any factor to sell. That's the reason their income becomes zero. And they depend upon the state or the government to meet their needs. So government comes up with various welfare measures, poverty alleviation measures. It provides them free food, free medical facilities, and so on and so forth. So you know that is there, unfortunately, in a country like India. So those who are below poverty line are the ones who possibly have nothing of the sort factor of production I'm talking about. But households, because I'm talking about aggregate economy, I'm not talking about which household has what. I'm talking about households as an entity, and the households are the owners of all the four factors of production. It's a different thing that there are some households which own all the four factors, and there are some households which have nothing to own, which have nothing to own. So in course of production, when the firms demand factors of production, it is the households who supply these factors of production. You would wonder how come entrepreneurship is coming from the households? Because I said that owners of the farms are entrepreneurs. But remember, entrepreneur is an entity, is a human being I'm talking about here. Ratan Tata is an entrepreneur, and Ratan Tata belongs to his own household. Entrepreneur owns his own farm and produces output, engages labor, land, and capital, produces something. So obviously, all the factors are assumed to be owned by the household sector, and farms in course of producing output, they demand these 4 factors of production. And in the process, a market comes up called factor market, where factors are bought and sold at different prices. Each factor is sold, bought and sold at different prices. Land is sold at a price. It is not that the price is same every year, every time period. The price of each factor depends on the relative scarcity. So each of the 4 factors we talk about is paid a price. The owner of the factors gets the price of the factors, which is called income, to the households, those who own these factors. Landowner gets rent, labor owner gets wage or salary, capital owner gets interest, and the entrepreneur gets the residuary amount called profit. So whenever you produce something or produce anything, we engage land, labor, capital, and entrepreneurship. And while engaging these 4 factors of production, we make payments to the factor owners. We pay rent to the landowner, wage and salary to the labor owner, interest to the capital owner, and on profit to the entrepreneur. So what happens? In course of producing output, the farms are incurring factor costs. What are the factor costs? They are land cost, labor cost, capital cost, and entrepreneur's cost. Rent, wage, interest, and profit. So in typical sense, when you talk about in microeconomics, you talk about a particular farm. And we like to know what is the profit of a farm. The profit of a farm is nothing but total income the farm earns, the total revenue the farm earns in a particular time period, minus the 3 other factor costs: land cost, labor cost, and capital cost. Rent, wage, interest. Suppose a farm has earned an income of 100 crore rupees. Revenue, sales revenue is 100 crore rupees for the farm. Has made a payment of rent of 10 crore rupees. Wage of 20 crore rupees. Interest of suppose another 20 crore rupees. So how much is the total factor cost here? 50 crore. 10, 20, 20, 50 crore. The remaining amount becomes profit. Where does it go to? It goes to the entrepreneur. It becomes the profit. So in microeconomic sense, whenever you talk about profit, how much is the profit of a farm? We say it is revenue minus cost. Then entrepreneur's amount is considered as profit. Then profit minus revenue minus cost is called profit. But in national income accounting sense, all are costs and all are incomes. All are factor costs: rent cost, wage cost, interest cost, and profit cost. That means these are the 4 factors we are engaging, and the total cost is nothing but total factor cost. And what is factor cost in one sense is the factored income in another sense. Rent income, those who own the land, they rent out the land, get the rent as their income. Those who own labor, they sell labor in a particular time period, they get their salary or income, salary or wage, that is their income. Those who lend their capital, they get interest on the capital. Then those who become entrepreneur, they get profit. So what is cost to the farms in one sense is the income to the household in the other sense. So the factor cost in national income accounting sense, everything is a factor cost and everything is a factored income. The sum total of the factor cost is the sum total of factored incomes. So wage, rent, interest, and profit all together, they constitute the factored income, and they also become the factor cost. Okay, so now what has happened? The farms have produced the output. In course of producing the output, they have engaged land, labor, capital, and entrepreneurs. They have incurred a cost of, suppose let's say, land cost of 100 crore rupees, labor cost of 200 crore rupees, capital cost of 300 crore rupees, and profit of 400 crore rupees. So total comes to 1000 crore rupees. And this 1000 crore rupees has gone to the households in the form of rent, wage, interest, and profit. Ratan Tata's profit, which suppose I am talking about entrepreneur. Entrepreneur share is 400 crore rupees here. Where does it go to? It goes to the households which have produced entrepreneurs. It becomes their incomes. So the total household income becomes the farm's cost in another sense. Now, farms have produced the output. They have incurred the cost. Households have earned the income in course of production by supplying the factors. Now, what would be the next role on the part of the farms and the households? Farms would like to sell all that they have produced. By engaging factors of production, whatever they have produced, they would like to sell them. Where would they sell? They would sell the goods in the goods market. So a new market crops up, that is called goods market, which is on the right side, as you can see. And who should be able to buy the goods? Those who have incomes in their hands, they are the ones who can buy it. So household is considered to be the owners of the factors. They've earned the incomes in course of production. And the entire 1000 crore rupees of income is available in the household sector. What should the households do? Households are expected to spend the income on demanding the goods that are produced by the farms. If the entire 1000 crore rupees is spent by the households on demanding the goods by the farms, then the circle is complete. There is a fine macroeconomic balance. The demand is equal to supply. Demand for goods is equal to the supply of goods. The total supply of goods is how much? What is the value of the goods produced in the economy? It is the total factor cost. Is that clear? Can you say, now you have said land cost, labor cost, capital cost. Suppose I say land cost is 100 crore, labor cost is 200 crore, capital cost is 300 crore. Now, the farms produce the output at 1000 crore rupees. How much is the land, labor, and capital cost? 600 crore. But the farms decide to sell the output at 1000 crore rupees. Then how much is the entrepreneur's share or the profit? It becomes 400 crore. So, when I say the value of the output is that it's cost, output is cost inclusive. The price at which the product is being sold is inclusive of the entire cost. Here it is the land cost, labor cost, capital cost, plus the entrepreneur share. Whatever margin of profit the entrepreneur likes to take for himself or herself is already added. So 600 crore rupees is the land cost, labor cost, and capital cost together. All the farms decide to make a profit of 400 crore rupees. So they will add 400 crore rupees to the cost, other costs. So they will sell the product at 1000 crore rupees. That means the value of the output produced in the economy is 1000 crore rupees, which is nothing but the factor cost. That is land, labor, capital, and entrepreneur's cost. So if the value of the output is 1000 crore rupees, the income available in the economy is also 1000 crore rupees. Is it clear? Anybody who can comment? Is it not that the income available with the household is same as the value of the output?
The total income of household.
Yes. Will that be same as the value of the output or not?
No, sir.
Yeah. Can you, I mean, where is the doubt?
Whatever will be income,
yes,
he must be saving.
No, that comes later. Let's say the total income of the household. Total income of the household, I am telling simply the total income of the household should be equal to the total value of the output. Who have produced the output? The farms. Farms have produced the output of 1000 crore rupees. That is how I presented. I said land cost is 100 crore, labor cost is 200 crore, capital cost is 300 crore, and the farms decided to sell the output at 1000 crore rupees. That means they added a profit of 400 crore. So the value of the output produced by the farms is 1000 crore rupees. If the value of the output produced is 1000 crore rupees, the income available in the household will also be 1000 crore rupees. Because where does this rent go to? Rent goes to the households.
Yes, sir.
Wage goes to the household. Interest goes to the household, and profit also goes to the household. Obviously, the farm I talk about, farm is also owned by the household. I am only separating the farm as a separate entity to show their economic activity. But otherwise, the owner of the farm, as I said, Ratan Tata is the owner of a farm, suppose. Ratan Tata belongs to his own household. Mukesh Ambani belongs to his own household. So if he is making profit, his profit is his household's profit, his household's income. So that way, the income of the household is equal to the value of the output produced.
Yes, sir. All clear.
Okay. Now, if all that the producers have produced, the farms have produced, if that is demanded by the households, that means if the entire 1000 crore rupees that the household sector earns is spent in the same time period on demanding the goods in the goods produced in the same period, then the circle is complete. There is fine macroeconomic balance. There is equilibrium. Demand is equal to supply. Aggregate demand is equal to aggregate supply. But it may not happen. Okay. So in the first case, we see in a two-sector model, we see that the circle is complete. It is possible that all that the households will earn as income can be spent on demanding goods and services produced by the producers of the farms, and then aggregate demand of 1000 crore rupees will become equal to aggregate supply of 1000 crore rupees. But the moment you talk about a three-sector model, things will change. Or even within that, I am going just a minute. Yeah, I'll come to the saving case later on. Okay, I'm going one step by step. So in the three-sector model, I'm moving from one case where we see that possibly a fine macroeconomic balance is possible. That means all that is produced can be demanded. There can be equilibrium of the income of the economy. But that will be disturbed if we talk about a three-sector model. What is a three-sector model? In addition to households and firms, we now introduce government as a third entity, third player. So far, we did not talk about government. Now, every economy, as you know, that we talk about any economy of the world, every economy has got a government. So, if you have government, what will the government do? Government will collect taxes from the people out of their income, and then government will spend that on various heads, be it welfare measures, be it infrastructure building, and so on. So, as you can see in this model, three-sector model, we have households and we have farms, but in the middle we have government. The moment you talk about the presence of the government, what we shall observe? All things remaining same as we have discussed earlier. Now let's say, because of the presence of the government, the first thing, the thing that is expected to happen is a part of the income earned by the households will be paid as tax to the government. So what is the total income the household sector has earned? As I have said in the previous case, it is 1,000 crore rupees. Let's say government levies a tax of 10%. So that means the total tax collected by the government will become 100 crore rupees, which the household sector is supposed to pay to the government. So after the taxes are paid, whatever is left to the household sector is called disposable income. The total income of the household sector is 1,000 crore rupees. But after the taxes are paid, the household sector is left with a disposable income of 900 crore rupees. So the household sector now cannot spend entire 1,000 crore rupees. It is only left with 900 crore rupees. But what is the value of the goods available in the market? It is 1,000 crore rupees. So other things remaining constant, if you assume that then household sector spends the entire money, entire income, then what it will do? It will spend 900 crore rupees to buy the goods from the goods market. It cannot spend 1,000 crore rupees. So as a result, what has happened? Tax has become a leakage in the income stream. We have introduced a leakage here in the form of tax. It doesn't allow the income to become equal to expenditure. It doesn't allow the demand to become equal to supply. However, if all the tax that is all the taxes that are collected by the government in the form of revenues or incomes, if that is spent, if the government spends that on various heads, then the circle is complete. Government collects a tax revenue of 100 crore rupees. What will the government do with this 100 crore rupees? It may invest this 100 crore rupees on infrastructure building. It may invest this on providing subsidies to different industries. It may use this for poverty alleviation programs. So at the end of the day, what you may experience is that the tax which has become a leakage may have a corresponding injection, that is government expenditure. If government expenditure is equal to the government revenue, that is tax, households rather than spending the entire amount of income, there are two players who are spending that 1000 crore rupees. Household spends 900 crore rupees and government spends 100 crore rupees. Again, at the end of the day, their total income is equal to total expenditure. Okay. Now come to the third model, a fourth sector model. Here we introduce
Hello.
one more player. Yes.
Sir, in the three sector model, the taxes collected from the firms that will be also added in the total cost of output, right?
No, total cost of it doesn't become a part of the total cost of output. It becomes, see, taxes here I'm talking about is are the taxes on the farm's income. Okay. It is the profit tax I'm talking about. Okay. So here you can see there are two arrows I have marked. One is the household tax, the other one is farm's tax. I meant no, this is we can also avoid this simply to tell that entire income is with the household. Then you can only talk about one source of tax on the part of the government, that is household. But if I say the profit is part with the household, sorry, with the farms, then taxes are paid by the farms directly to the government. They are not coming from the household. So that way we are presenting it. The profit of the farm is directly coming from the farms to the government. It doesn't get transferred to the household's account and then comes. That's the reason why I have put two arrows on both the sides. So here the taxes are the leakages, whether they are coming from the household sector or from the farm sector, and the total income remains the same, that 1000 crore rupees. Simply here I am assuming that the profit of 400 crore rupees is parked with the farms, and that is the reason why I have put this tax arrow from the farm side as well. And when it comes to government expenditure, government can spend on household, government can also spend on the farms. Okay, government can provide subsidy to the household or to the farms, can create public goods for the households, can create infrastructure for the farms. So that way, government is there to help everybody. Okay, so at the end, what is necessary, no matter what is the source of tax, all the taxes are the leakages, and the sum total of the tax revenues the government collects must be utilized to demand the goods and services by the government. So government should spend. If government has spent the entire amount, then there is a fine macroeconomic balance. Coming to the fourth sector model, we now introduce one more player, that is the foreign trade. We have another sector to come up. Other than the household, farms, and government, we have the fourth sector to come up, that is the external sector or the foreign trade sector. So we'll have export and import. Now, what will happen? I said earlier that disposable income in the hands of the households turns out to be 900 crore rupees. Now, out of this 900 crore rupees, I mean, in the previous case, I took the case of a closed economy. Now I'm talking about an open economy. The economy is opened up. We have export and import. Our goods are exported abroad and we import goods from abroad. So as a result of this export and import, what is likely to happen is that the household sector, which has now got 900 crore rupees of income, after paying taxes, it might spend 100 crore rupees on demanding goods from abroad. It will import goods from abroad. It will demand imported goods. The income that the household possesses is generated in domestic farms. Now, the households are not spending the income on demanding domestic goods. They are demanding foreign goods. A part of the income they are spending on demanding foreign goods. Imported cameras, imported TVs, imported cars, and so on. They don't demand Indian goods. Suppose I'm talking about India. So they are not demanding Indian goods, they are demanding foreign goods. So by the amount by which they spend their income on imported goods, that amount of goods remains unsold in the domestic economy by the domestic farms. However, what could happen? If we are importing goods from abroad, we must also be exporting goods abroad. If our farms are exporting goods abroad, if we are demanding foreign goods, foreigners must also be demanding our goods. So if all that we export is equal to all that we import, we can maintain a balance, macroeconomic balance. Does it happen? It may not happen always. Similar to the previous case, does government expenditure become equal to income, government taxes? No. You may sometimes see expenditure is more than income or less than income, less than taxes it collects. Similarly, import may be greater than or less than export. If it is equal to export, then it is fine. We import foreign goods to the tune of 100 crore rupees and our export bill is also 100 crore rupees. So again, the demand becomes equal to supply. But we fail to, always, every economy of the world fails to maintain that. So our export bill sometimes becomes greater than import bill, or import bill becomes greater than export bills. That leads to disequilibrium. That leads to disequilibrium in the foreign account. Okay, we'll talk about that, its implication later on. But then this is yet another possibility. Come to the last model. We have the 5-sector model, where in addition to the 4 sectors of the actors I have talked about, if we introduce financial sector, the banking and other financial institutions. As you know that every economy we talk about has banks and other financial institutions. The presence of banks has resulted in saving propensities among the people. So the households, what they could do, a part of their income, they might decide to save. See what we started with, house total income was 1,000 crore rupees. 100 crore rupees was paid as tax. 100 crore rupees was spent on demanding imported goods. But we did not talk about a possibility of the households refraining from current consumption, not undertaking current consumption, whether it is imported goods or domestic goods. They don't consume currently. They decide to save a part of their income. They have earned income currently, but they decide to save a part of their income. Suppose it is 100 crore. So out of disposable income of 900 crore rupees, 100 crore is saved in the banks and other financial institutions. So that becomes yet another leakage in the income stream. All that you save today, all the income that you save today, refrains you from current consumption. You don't consume it today. Don't spend that amount today, currently. So what will happen? By that amount, goods will remain unsold. But what happens? Where do we save? We save money in the banks. What do the banks do with this money that we save? The deposits received by the banks are channelized towards productive investment. Banks lend this money to the farms which would like to invest. A particular farm likes to undertake a new business, comes to the bank to borrow money. So the saving which has been made by you and me, that is utilized on the part of the banks to lend money to the public, to the farms, which would like to undertake new business. So here what happens, the farms themselves are undertaking the business. I mean, the farms themselves become the demander of goods. Households are demanding goods. Now farms borrow money of 100 crore rupees, then they demand goods to produce something in the future. So when they demand goods, the demand for goods by the farms is called demand for capital goods, or it is, in a sense, you can say it is investment on the part of the farms. Farms are investors. So the saving is channelized towards productive investment. So if investment is equal to saving, then there is macroeconomic balance, fine macroeconomic balance. So what we see, as you move from 2-sector model to 3-sector, then 4-sector, then 5-sector, we introduced 3 leakages. We introduced 3 leakages. They are what? One is saving. Saving is one leakage. Then tax is another leakage. Then import is another leakage. Saving S, T is tax, M is import. So we created 3 leakages. And these 3 leakages correspond to, or there are 3 injections which correspond to 3 leakages. What are they? Investment corresponds to saving. Government purchase or government expenditure corresponds to tax. Export, that is X, corresponds to import. So if sum total of the leakages, sum total of the injections become equal to the sum total of the leakages, the economy is in fine macroeconomic balance. The economy is attaining equilibrium income. If it doesn't, if the sum total of the leakages, sum total of the injections doesn't become equal to the sum total of leakages, then there is disequilibrium. Disequilibrium can be of 2 types. One is the leakages can be greater than injections, or it can be less than injections. When leakages are greater than injections, we may experience recession or contraction in the economic activity. When leakages are less than injections, we experience a rise in income and expenditure, and thus it will cause boom in the economy. So this is something that you come across when you talk about the circular flow of income. So we get to know with this that how an economy behaves as far as different economic agents are concerned. And given this, what I'm going to discuss in the next class when I meet is a particular model, economic theory, macroeconomic theory to address the problems of the disequilibrium. Given the fact that these are the economic agents, these are the possibilities, then how can we address the problems? We shall discuss that in the next class when I take up one particular model or one particular macroeconomic theory. Okay, with this I stop here. Okay.